right. Hello, everybody, and welcome to the live stream for what is going to be a massive earnings week. Yes, we've got Amazon, we've got Apple, we have, of course, pretty much the American consumer on focus this week. And after a pretty good bank report and in general, banks running, energy, and everything else, what can we expect from inflation? Well, we've got all of that and more coming up. Let's give a big shout out to some people that have joined us here throughout the stream so far already. We've got Kat, OG, Gary, Saini, then we've got James, John, Anthony, Tortvi, Oleg, Oren, APH Foundation, Zulfi, Michael, Richard, Bob, Paul, Joachim, Art White, Christian, Paul, and many, many others. Thank you very much for all joining us. How was everyone's weekend? Did you have a good weekend? Are you ready for a market of volatility, hopefully starting this week? Yes, we go into, of course, August tomorrow. And we all know what that means. It means we start the 2 months of volatility and, in general, the period of probably most interest during most years. So the next 2 to 3 months, if it's going to happen, that's usually the time it's going to happen. We'll talk about that and more. So as we always like to focus on, what are our thoughts coming in? Well, I think that if the bulls are going to continue to just keep pushing this market forward, it's clear what sector might be next. And it's probably going to be in hyper stocks. And really what we mean by hyper stocks is the stocks that did very well from the November run to kind of the February to maybe April run of 2021. They were all the hype, and they usually come after financials. So we usually see them go after financials and after energy. When they turn, we see often hypers turn. Reason? Well, usually it's to do with lending and the fact that the market just feels like everything's loose and everything's pretty good. This week, we'll probably detail this, but mark this level. It's going to be important, 51.46 on something like RK. And of course, you'll want to be looking at a whole bunch of the hypers again. We'll bring back a list next week once we get Amazon and Apple, and we'll see whether we've got this breakout. And then we'll be doing a big focus on that if necessary. Let's have a look at what some of the people are saying here. Joey Camo, I think says took some profits on Apple, leaps 2/3, letting it ride into earnings. No worries, man. Taking profit is always pretty decent into earnings. It's not a bad time to sometimes stop flipping the dice and, of course, go from there. Let's look at some of the strategies here moving forward and what we've been noticing. Now, something I mentioned in our macro, if you're ever interested in joining our private community, our macro week ahead, which I do Mondays for everybody or Sundays in American night, was the surging demand for calls. So basically, we've had a pretty strong call season. We already know this. Here's a bit of context around those calls. So total call minus put options volume on US exchanges back to December highs. Now, previous times we've seen this was February, and we all know what happened in that period. We've also had some low points as well where puts have been out of control, which was March in the middle. Well, we know that turned. And of course, December, well, we all know where we were. After December, we had a very, very good run in January. So we're basically at a pretty extended levels not seen since 2021 December. Is that a problem? It could be. It certainly usually marks that we're getting into dangerous territory. Some of the things that we've talked about many, many times before are the seasonal trends. So I guess we'll just kind of outlay these again for today's stream. One, this is volatility. We usually expect volatility to increase over these next 2 to 3 months. These are pre-election years taken over the last 25 years. And then, of course, here we have the data going all the way back 34 years. And I think the trend is clear. This was taken as of last week, but clearly, if you follow over on FX Evolution, by the way, on Twitter, just quick, X, Twitter, whatever it's called now. And we see here this spike in volatility that tends to run for the next 2 to 3 months. Volatility doesn't always mean markets are going bearish, but it does mean that usually you get a lot more day trading opportunity. And it's kind of exciting if you're a day trader, scalper, or even swing trader over the next couple of months, because things get a little bit tasty and markets tend to move a lot more, which is good because always when we get volatility, we bring opportunity. Here is what the trend has been over the last kind of 20 plus years, 7 years in total of pre-elections. We tend to drop somewhere around this area. Will we see it again? It's going to be really based on earnings. And of course, we can't guess the earnings just yet. We're going to have to figure out whether they're looking good or bad. Some of the big outliers this week are going to be these ones. Make sure you have an earnings calendar. I like earnings whispers. This one here seems to be doing pretty well. And of course, there's always earnings watcher as well, which gives us some information about the options expected volatility. We've got PayPal, Shopify coming out on Wednesday. That'll be a fairly big day. AMD and Focus. We'll look at the stock later on today. And then we'll also get the big ones here, Apple and Amazon. Everything's mostly focused on Thursday and Friday for this week, though. Non-farm payrolls coming out on this day. And remember, the 10th of August, we have CPI. So effectively, over the next 10 days, whatever that is in trading days, we're going to get all the information that usually creates a lot of volatility. Big earnings finishing up in terms of the biggest stuff. Then we also get the bringing on of CPI. Now, what do you guys in the chat think CPI is going to do? Is it going to increase or decrease? Chat, you're smart. You guys in the community know what's going on. What do you think? Kevin N says, tap the thumbs up, people. It's free. Thank you very much, Kevin. Appreciate that. And it says here, Pablo, if you're not bullish on US indices, trading is not for you. That's what Pablo says. Well, Pablo would know, yeah? You're going to be trading the trend is what Pablo is going on. Joshua says, thoughts on biotech? We'll look at that very soon. I think with the thing with when we're talking about trading on indices, okay, indices fair enough, but I think actually the best trades recently, Pablo, have been single stock and sectors, and we're still big on that. I still think single stocks and sectors are presenting the better percentages at these levels. That's just my opinion anyway. All right, here we go. People's opinions are coming in. We've got increase, slight increase, decrease. Billy Mays says, Adrian says increase. James says flat, decrease, decrease, increase. Everyone seems to be kind of in the middle of the land. Well, according to Bank of America and a few of the other large groups sending out their reports, they're guessing it's an increase. So that's going to be a big one here. China's been hot. Totally agree. China market, we've talked about that several times on the stream, is looking very, very decent. In fact, when we go through, let's have a look through our analysis here. We'll bring up just this Euro USD for a second. Let's have a look at what is the CQQQ doing, because CQQQ started flying last week with 6.5%. We've talked about this level being, I guess, what I would call investment grade for a little while. Investment grade is a very different, basically since here, I've liked it a lot. So I liked it here, I liked it here, I liked it here, and I still theoretically like it. There's a lot of runway in the Chinese stocks, and I think we know that stimulus packages are going to come. They've already said so. Generally, they come in October, which is still my thought process. And is it worth your risk? Well, that's a decision you're going to have to make. Of course, I'm not making it for you, but I can say that that looks like an inverse head and shoulders. This will most likely get stimulus. And of course, that's a fairly strong weekly candle of engulf. And if you want to say, well, where'd it come from? Where's it going? Well, I think you can see that this market is totally different to the other ones. We're back at prices for their technology, basically 2015, and we've dropped, what is that, 100? So basically we've dropped about 50+% off the base. So even if it went back to some kind of equilibrium sitting around $60 or $70, it still presents interesting value. I think at the moment, yeah, single stocks and sectors is the best in the US market. And outside of the US market, it's probably going to be maybe even this one. Maybe this is presenting the best pressed area. Michael McCall, sorry, says, when is the U-turn? My SQQQ position is getting demolished, lol. Well, if it's going to happen, Michael, then it usually would happen in the next 2 to 3 months, man. But in terms of when it generally happens, I mean, statistics would say right now, the facts are, do we have a turn on this market at this stage? And the answer is no, we don't. Because every time we kind of go in and we look at markets coming into weakness, e.g. last week when it happened here, we hit the demand. And as we said in the, Thursday video, I'm pretty sure we just basically said, well, we've hit it. That was the Bank of Japan kind of scaring everybody. And then we just know that that's demand. And the problem is that each time it hits these levels, what's the normal reaction? It's buy the dip until it isn't. So At this stage, it's still buy the dip until it isn't. Do we have any swing trade changes? No. Have we seen unusual volume activity up here? Yes. For the first time in the last 2 weeks, I would say, we have seen significant outflow dumping. Now, the problem is it's masked by the big rebalance we saw in the Nasdaq. So we don't know if it's real. We don't even know what it is yet. And that's the issue. We have no evidence. Let's go through some key levels for the S&P 500, and then we'll keep going from there. So first up, here's the US 500. We'll use this over ES futures. It's the same kind of coding structure. We know that the key level of demand is 45.30 in terms of US 500. We also know that we have a higher high that could be pressed again today, and we have a couple of gap fills we'll talk about in a moment that have not happened. So the first up one is that the market's coming in hot. Go down to a 15-minute chart. What level may you need to mark? Well, I think this one down here is going to be important. 45.67 is the low. If that does get closed below, we're probably moving back down to the demand at that point. Okay, that's first up. If you're a bull, you really just want to see one thing: take the high out. Take the high out, and especially if you close a weekly above this, which is 46, basically 12. We'll go with 46.12. If you take that out and you close above it this week, which level do we go to? It's very possible we're pushing. You're not going to like it, some people out there, but it's very possible that we're actually pushing into the 4,800 realm, basically about 47.80. Now, that's how much is it potentially at risk here? Because a new high closure, what's going to stop it? You tell me what's going to stop it. I don't see anything that could potentially stop it other than random news, but it looks like we're kind of going into that all-time high at that stage. So it really is time for the bears to push if they're going to push. Otherwise, we're just going to move to another squeeze, and people won't be able to like that and probably be pretty quick and pretty aggressive. Here's a candle that usually doesn't fail. Okay, this is actually a setup I mentioned in the macro this week, which is the Nasdaq. So we see a rejection. We actually get a new low. We come back up and we do this candle here. And I'm telling you, that is generally a liquidity grab. And if that had followed on, it's a very good trade. Very good trade. Traditionally, an exceptionally good trade that usually works out enough of the time. And of course, what trading is about creating replication here. So that's a big thing when it comes from I was just reading a very nice comment, actually. Someone here, I won't mention their name, says, hello. I want to let you know the Monday macro is very rewarding for me as a swing trader and investor. That's good, man. Above all, it's incredibly instructive. And when it comes with the financial education and understanding, it really helps out. I think these do best without any questions from the community so that you can go through with your thought and analysis. Well, I appreciate that very much. Thank you very much. Yeah, I do try my best on those, like I do on this show as well. But I just want to talk about this replication trade, because if you understand this trade and you play Forex, let's say you play Euro US dollar, pound US dollar, this is pretty much a classic. I would almost call it an El Clasico. And it's something that you can almost replicate across the board in knowledge of markets. Now, of course, would it be better in the direction of trend? Yeah, always. If this was on a smaller time frame in the direction of trend and the turnaround, it would be always exceptional. Thoughts on Uber? We'll cover it later. A few people have asked about that. So yeah, what we needed here, and this is the difference between, replication and not replication, is getting it under 15.4. If that had happened, closed, yeah, I would have shorted it. Okay. It's that simple. It's just replication. In this case, though, did we do it? No. So, are there shorts in here that you could have entered? Yes. Is there a short underneath here that you could have entered? Yes. Where was the next target? 15,000. Would it have been worthwhile your risk reward? In my opinion, yes, it would have been. It would have been a pretty good options trade. And instrument selection would have been key here. But that's not what happened. It didn't do that. So as we find ourselves at these levels here, I think it's the same strategy or the same thought process as the S&P. The problem is we have this dirty big candle. It looks like it wants to go back to go for the highs. Does it close above it? Now, that's going to be the key, because if it does, where are we going next? Well, we zoom out. Unfortunately for some people, unfortunately for others, if you're a bull, probably 16,400. I'm just being real. Somewhere in there is probably where the structural high is held, and it's going to be a bit tough. So closure will be the key this week. What do you think in the chat, though? Do you agree with me? Do you disagree with me? Give me your levels. Let me know. I'll read some of them. It's good. Deep says, sorry, I hurt your feelings. Deeps, you didn't hurt my feelings, man. I don't even know what you said, but that's all good. Market usually breaks previous highs before collapse. Yes, well, you're looking at I think like a 1930 scenario there, yeah? A 1930 scenario. Che EG says, thoughts on N phase, or are you only interested in technicals? Are you talking about N phase? N phase broke below bad earnings. We can load it up as a stock. We'll do it now, I guess. We talked about those two markets. Here's N phase, and it broke down. I don't want to call a low here on N phase. I don't know that's true. Now, if you breach this, and I think it's worthwhile again considering alerts in the future, if that got breached, I'd be pretty interested in it. That would mean that this was most likely the low, and I'd be looking at doing a pullback into a long. That would be a fairly replicatable trade. Yeah. Joshua Burns says, when everyone piles in, lose all contact. I'm not sure if we're back, guys. Sorry if we just dropped. We'll have next new net next week. But yeah, this Australian internet can be a bit blocky, unfortunately. I'll use my phone. 1 second. NBN, yeah, I moved to my phone. All right, we back. I'm on the phone. NBN, National BS Network. For any Australian, they'll know what it is. National BS Network. High quality, costs $150 a month. It's really good, you know. That's all it is. $150 National BS Network. All right, Infinite knows what I'm talking about. Thank you very much, Infinite. Appreciate that. Razor Wire Beams, thank you very much. $5 says here. So Enphase is my highest conviction long-term play. Was going to super chat you about it anyway. Looks like support at 118. Yeah, that's correct. So I've got the 118 marked out in the future. I'm not saying it's dead, by the way. I understand. Look, you know, I have these micro switch, the company Enphase or whatever. I got their micro switches on my roof personally. I think it's a pretty good company. It's not bad. It's got a little bit of tough times around it at the moment. If you're high conviction on investment, that's fine. But again, I don't know if you can't expect this to go to 120 first, 118 first. It really comes down to how this price action plays. If I was trying to trade this right now, I wouldn't buy here. I would wait for my close and I would wait for my replication strategy. And if I don't get my replication strategy, I wouldn't trade it. Because remember, if you love something, if you're investing in it, all you're really doing is saying, okay, I think it's cheap based on fundamentals, and I just want to buy the dip at different levels or buy the V. And I'll just say to everyone in the chat here, just to help out since you super chatted, let's say the market comes down here. Most of you would be like, oh, support, buy the dip or buy that dip, okay? That's what you're doing right now. You're just going BTFD everywhere, guys, BTFD. Now, that's okay, but the problem is it could keep dipping. What's to say it hasn't stopped dipping? It's actually better to buy the V, okay? So buying this price, let's say it does this. Buying this price over here on the left-hand side is much worse than buying on the right-hand side. So just remember that. Markets are ingrained to go up. If you have just begun trading in the last 2 years, theoretically, you are better to be bullish always. I've always said this. The stats are like 60% in your favor. It is absolutely rigged towards the bull side. Never forget that, yeah? Selling is hard, buying is easy when it comes to quality stocks. Now, that's probably just unique to those. That doesn't mean you don't short your Roku at $400 because, you know, it was a rip-off. I'm just joking. You know, anyone that's been watching for a while would know what I'm saying. But yeah, buy the V is technically a better strategy. Maybe that will help you. You're better off buying the recovery component and then thinking about the recovery, it actually will save you a lot of money buying the V. Why? Because you know where your stop loss is. It's underneath the V. You've already seen the recovery. It could be that the V is the recovery. Now, of course, it's more complicated than that because you could say, well, Tom, I bought the V right here and I lost, bro. Yeah, but it did still go up for a bit. Now, if you bought this particular moment, guess what? The market came back down. Crap. It's against me. That sucks. Your stop loss is down below here, let's just say, and it comes back up. What are you going to do? Well, maybe I need to close my position. Why? Didn't do what I thought it would. Markets, actually, I'll say this to chat. There's some guys here been like trading for 25 years in our chat, 30 years. Would you all agree, people that have been out there for a while, would you all agree that the market often gives you, once you get a good entry, would the market generally give you a second chance to exit? Okay, that is a question I want to ask everyone in the chat while I read this other question here from Wilberto Carlos. $2. Any thoughts on Geely or Geely 175 HKEX? Okay, we'll check that out in a second here. Didn't end phase beat earnings, but had really bad quarter three forward guidance. Look, I'm not saying I've read the report, but I'm just saying when the technical levels, I think the stock is okay. I just think that we might potentially go to 118. If we don't, 191, I'll use a trigger over my thought process. You know why? Because my opinion of end phase means nothing. You know why? I can't beat a robot. I have absolutely no idea how to read the report better than the fundamental robots that, let's call it, Wall Street have that activate these particular trades. I just don't have edge in that area. Now, once you realize that you don't have edge in that area, I can read a report. Yes, I might be better than some of you at spreadsheeting it. However, in general, I'm not going to gain edge off that. That's going to help me. So I just look at a basic number of factors that are based on economists' 12-month targeting averages, based on forward earnings targets, based on EPS, based on mostly forward guidance concepts. And I just say, is it cheap historically or not? Has anything actually changed about this company? And if it just seems like a small rebalance fix, then I'll buy it. Luke says, shouldn't need to exit, should be able to hedge lower. Why can't I exit? Why can't I exit? I don't understand that. Why am I not allowed to exit if it doesn't trade the way I thought it was going to? I could do that. I could also have a different strategy if I wish to. That would be fine, I guess. But anyway, it doesn't matter. Buying downside, etc. Yep, we'll get off this stock now. We'll do Wilberto's in just a second, but let's go through a couple of stocks here that are in focus this week. First up, Apple. What's going on there? 196.68. Interesting. Okay, so it keeps rallying. It keeps holding. 20 moving average daily would be what I'd look at here, and the 4 hour as well. And what you'll notice, this thing loves the 20 moving average. So certainly put that one on your charts. If we actually go indicators, moving average here, and we type that in just quickly, we go to a simple moving average, and then we will go to settings, and we will make this red so it can go fast. We'll make it a 20. And then we don't need to weekly here, 20 daily. Look at that. Look at that stupid thing. So this basically has just been following the 20 for quite a while. It's what I call when you get a breakout from a significant level, which is here. It seems so long ago now, but anyway, we get a touch of the 20. Perfect. 1, 2, usually on 2. So it's my 1-2 strategy. 3, 4, 5, almost 6. What you're looking for here with Apple is to close below the 20 and not make a higher high before it. That will be fairly significant, I would say, for a turn, along with just general price action strategies across the board. AAPL looks like an algo. Well, AAPL just keeps buying the 20. It just keeps doing it, man. You can't stop this thing. Exit and regroup. Yeah, I think the problem is you entered the trade. This is going back to the end phase question. You entered the trade. Obviously, your thesis was probably wrong, or at least it could have been wrong. in enough times out of 10, potentially, if it was wrong and you get the second chance, it may be more profitable for you to exit. You know how you work that out? Do 40 of the same trade, the same replicatable trade, and work out whether that's a better strategy. If it isn't a better strategy, don't do it. It's that simple. That's all we got to do. So Apple, 20 moving average. Amazon. Now, I'll be real. That hit my target. That is 100% my second target. I expected to sell from this level. Okay, that's just what I expected. You can see it did so far. Has it sold enough? No. Has it retraced? Yes. If that now takes that low out of 126, do I think that's important? Absolutely. Would I sell it if I had this as an investment? No. No, I wouldn't. That's my personal choice. I would not sell it if it was my investment. Remember, investment, often people on this channel misinterpret me here. Investment and trading is a different concept. If I was trading, is that my second take profit? Yes. Would I take it off? Yes. Would I descale heavily into earnings? I've learned often to take all of it off into earnings, especially when I think it's potentially a buy the rumor, sell the fact. But again, that's just my opinion on things. Idle, Guilt, and Silver says, I love the market during these times. Fair enough, man. Wilberto says at FX Evolution, it's the head company of Polestar, Volvo, Link, and Co. Okay, let's check it out, man. So this is this actually what it's called? Oh, here we go. Oh, Breakout Central, hey, man. And we go AMC a little bit later. We've got Uber coming up as well. I know a few of you want to look at these stocks. So this one here is certainly a breakout. Now, weekly wise, I think anyone can tell that it's a massive breakout. Had a good accumulation. We did get that selling climax probably over here, though you could have argued it was over there and it was just all part of a big thing. Volume held up okay, but actually dropped off compared to over here, so it might be hard to find it. Then we get this big weekly or daily, sorry, and then we've got a bit of a follow-on. Look, I wouldn't say this looks very weak at this stage. I do think that it's coming into kind of that $13 range. So $12, $13 range seems probable. And then that's probably where I'd expect it to weaken off. Again, it's already gone up, almost 20% in a few days. So yeah, that's the type of thing I'd be looking for. If I was in it, would I sell out yet? Probably not. I'd go look at the smaller time frame. There's no reason. I haven't seen a change of trend. So that's a big one there. Kevin says, I bought Apple at this. Thank you very much for the donation. I bought Apple at the start of the year. It's killer. It's killer. Very good. Have you talked about metals yet? No, I haven't, but we will talk about metals. First up, I want to begin on Vail because we saw some large trading on Vail last week. And then since then, it's actually weakened off quite a lot. So iron ore certainly suffering. And this is interesting because it's not just Vail. We've got BHP, we've got Rio. Most of the large iron ore companies have obviously dropped. And this is something that I think is interesting to watch in the background. Why I think CPI might go up is not only that Bank of America think it's going to go up, but think about energy price. Think about diesel prices. I might post it on Twitter, so follow at FX Evolution tomorrow. It will be in the daily show as well. I'll bring diesel prices into it, so you can see the disconnect between diesel prices and CPI. And I think that might be that's a pretty good stat actually for you to have a look at on the charts. Watch the US 2-year this week, guys. Watch it over non-farm payrolls and the earnings announcements. 5.1% still is a trigger, I believe, for the shorts moving forward if that ends up occurring. Dollar index, this is the weakness zone we talked about in the weekend video. Currency traders having pretty good time of it at the moment. Some nice trades there on currency. Dollar index in particular flying around. Plenty of trades on the Bank of Japan stuff. Not that I usually trade the central bank intervention like they've been doing. But yeah, here we get that change of trend. I like that as a short. I would usually break even a trade like that into the bottom if that ends up making its way there. Joshua says biotechnology is a rotation sector. Generally, biotechnology will come with the hyper stocks, man. The hyper stocks. So we'll look at that soon. Ark, Roku, all those stupid things. They're all basing off. I mean, if I showed you these charts and you didn't know what they were. So if I show you a Roku, and you look at this chart and you check that base out, just like we've been saying, the zooms and everything, you've got to like what you're seeing. Okay, there's the Roku. Let's have a look at the zoom. There's the zoom again, looks relatively good. We got the PayPal that we had on a few weeks ago. Obviously hit one of our first targets, but that kind of probably hit like maybe a too extreme low. What else do we have? I mean, any of these, give me some stocks, guys. Give me some weird hyper stocks. Throw them at me. I forgot half of them because we don't even trade them anymore most of the time. But that's because they've been useless. Now they're starting to show breakout signs. And you can pretty much find any of these in, I would say, like a stock twits or whatever it's called. PLTR. Well, PLTR went early, so that one's already kind of gone on the first initial. In fact, I actually thought it would short off this area up here based on what we saw. So I guess it still trades around that range. But yeah, beautiful base. Never hated the base. Never hated the base. When I saw it break out, yep, I thought this was super likely. As an investor, if you like PLTR, great base. Highly likely the thing will keep basing off and keep going. Because if it is a decent company, which I have no comment on because I don't know, this is the type of thing. Now, let's have a look at IBB and the biotech while you guys throw some stocks at me. Over here, we have biotech. Theoretically, if markets keep bulling, would biotech come? The answer is yes. Is there better than just buying the bio sectors? Biotech's very tough. You have to be very particular about what you're buying because most of the companies have zero earnings. I mean, they literally burn cash. So it's kind of like a hyper stock in that case. They burn cash massively. Now, some of the ones that we used to talk about a lot were gene resequencing stocks. SoFi, sure. Snow is another one that's kind of sitting around that we've looked at a few times here on the show. I mean, SoFi, beautiful breakout. We caught that one as a community, thanks to you guys. We actually caught that one down here. I remember you announced it. I loved it from an analysis perspective. It's a great base. What can I say? Great base. Moderna, Intel, yes, that's correct. These stocks, Adobe, that's not much of a hyper stock, but thank you very much. Airbnb seems more irrational, though. So let's have a look at Airbnb. We'll look at Uber as well. Airbnb, it's a nice base off. It follows my rules, which is generally around 18 months to 2 years after IPO, you come and hammer it. If you want to invest in an American IPO, usually that's the best way to do it. One I haven't looked at in a while. I wonder what Hood's doing. Yeah, I like this base here. I don't think I buy Airbnb at this price personally, but it is on its little run. Let's have a look at Uber. If we wanted to check out Uber. Oh, $48. Oh, sick. Do I want to buy that price? Hell no. Why is everyone liking Uber right now exactly? Other than it's on a run. Look, the trend's up. Don't get me wrong. But would I buy into this trend when my expectation would be to take almost all of my trade off in this area, especially in here? The answer would probably be no. If I give a fixed range here and I pull it over this whole range, you'll see you'll get your value area high up here. If I pull it over this trade down to here, again, you get your value area high up in here. I believe somewhere in there would be where I'd probably clip it. So would I buy it here? No. Personal opinion. Moderna is another one that that gets the hype often on it. Well, it used to anyway. The problem with Moderna is if you actually look at the basing, again, the structure is very important here. It keeps pressuring this low. I have a feeling it's going to take the low. What do you think, chat? Do you reckon that thing's going to take the low? Is it going to go to a new low first? Looks sick to me. Looks much worse. Superconductor stock is the next hype. AMC. I can't believe we're talking about that thing again. Let's have a look at AMC. Usually that never bodes well. Look, would I touch AMC? No. Do I like what I see on AMC? No. Can you prove me wrong? I hope you do, if you feel like doing that. I just think it looks, look, you're kind of looking at maybe a base structure for AMC. They stopped, what did they stop? The splitting of the stock that sent it up. Is this a base where you can bet one day someone on Reddit and everywhere else is going to get excited about it? Probably. It's highly, there's a good chance. We've had a lot of runs. But with all of these hype stocks, especially the AMCs of the world, what you're really doing is you're just sitting there waiting for somebody else to pick it up. And hopefully you're already holding it early. It's kind of like an altcoin where you're hoping that Bitcoin catches fire. So you go and buy Doge. Do you believe in Doge? Probably not at all. Is it a gamble? I would say yes. But what are you betting on? Well, you're betting that Bitcoin will go into Ethereum, and the Ethereum will go into Doge and DOT and every other coin under the sun. And basically you'll profit from those rallies. And you're kind of just sitting there landmining it, hoping. Now, it could be 6 months. It could be 3 months. Unfortunately, you may have to sit in it for quite some time to do that. And that's going to be a big problem. Let's have a look at Fiverr. Yeah, Fiverr should theoretically make a ton of money off AI adaptation. That actually looks like a pretty decent chart at this stage. So I don't like Fiverr's prospects long term, but at the moment I could see like a lot of people going to Fiverr, and then because there'll be so much decent quality product, like what is it? It's not $5 anymore, but maybe you pay $30 or $100 for somebody. They're using some AI assisted program. That AI assisted program is helping them create better quality than they've ever been able to do. Does the vast majority of people know how to use the AI assisted programs to create better quality? What do you think, Chad? Because ultimately, Fiverr's got a big problem. I think what do you think? Do most people have the ability to use the AI assisted programs that are out there to create quality stuff for themselves, or do they even want to? Should be the question. And would they rather spend $30 on Fiverr or $50 or whatever it might be to get it done for them? Or would they rather do it themselves? Abraham says, WTF is Fiverr, man. You don't know what Fiverr is, bro? You've been around the internet for like the last 20 years? No, probably 15. It's this great revolution where you pay $5 and someone creates a picture that was stolen off another place. That used to be what it was. Nowadays, it's a professional area, okay, where there's a lot of people helping others to design great graphical art and other things. Logan says, at the moment themselves. Scott says, get it done for them. Yeah, I totally think that's going to be people will get it done for them at the beginning until it becomes easy. Andy says the description of Fiverr was bang on. Let's look at the technicals though for a second here, because I'm actually more interested in the technicals. I really couldn't care about the rest of it. The market dumped. Okay, interesting. The market comes down, takes the low. Good. That's pretty Wyckoffy. Market comes down, changes trend in here, and then bails back down to this level. Theoretically, coming into earnings, Fiverr is sitting on a fairly decent base. Now, the problem is earnings is a gamble. So you have to try to take that risk out of it. I don't know whether Fiverr is going to announce that it's done really well. Wouldn't have a clue. That's the problem. We don't know that. But from a technical base, if I saw that on a quality stock, I think it's pretty good. Looks pretty good. Very nice. Thank you very much. Istvan, Ron, $50. Can you analyze corn futures? Istvan, really? Corn futures, man. Why we got to do that? Why you got to do me like that, man? Why you got to do me with corn futures? You should know, if you've been watching the channel for a while, that I don't like softs. I don't like them at all. I don't trade softs. I think they have nasty swaps on them and you get burnt. What's good about futures of the softs? When the trend is on, the trend is hard and very aggressive. But the chart does not ever tell you the real case scenario. So what I mean by that is, if you look at corn futures, and you think that this whole time it was an easy sell or over here it was an easy buy, just remember there's a bunch of roll contracts in here burning you up. If you ever trade natural gas futures, you'll know what I'm talking about. And you can actually look at like a corn futures ETF, if there is one in America. I'm sure there is. And that will show you how much they get burnt. Based on this, you wouldn't like it. I mean, you got 2 rejection wicks here. The market's come back down on the corn futures. For me to tell you how this thing will work, I wouldn't know. I don't even know what time of year is best for corn pricing. I'd have to go look at the seasonality for this particular thing. Has it changed trend? I would say it's incredibly neutral here. But yeah, those wick rejections would need to be closed for me to actually want to get involved in the momentum trade to 660. So at the moment, you're just kind of stuck in the middle. You would get, look, I'm telling you, you get super burnt in corn futures if you hold them more than a couple of weeks. What do you think of wheat, says Bob Down? I think wheat sucks, man. Especially when those giant hurricane tornadoes in America come and cut down my wheats. It just costs me a little bit when that happens, you know. Weather dependent. Wheat is mean. It's mean to me. It's like tornado chasers, except they chase my wheat contracts. All right, let's have a look at gold now. Let's move over. Sorry, man, I can't help you with the corn. So what do we think about gold? Well, we continue to see decent upticks in gold trade, and that means that obviously the volatility is here. At the moment, it's a bit tough. I would think that gold is possibly going to 1930, 35. I'm looking for that into this range down here. I'd like to see it there just because, you know, my own opinions. But if you have a look at GDX, it doesn't mean I need it to go there for trade, by the way. But if you look at GDX, actually filled the gap. What I would like to see is GDX stock find buyers. And therefore, I don't mind if gold goes up, because this is around the right area for a nice inverse head and shoulders. Now, I think gold stocks have been criminally undervalued recently in terms of how the market is seeing them. Look at this. We are in a horrible place in GDX stock often. It pretty much is trading underneath 2020. It's trading underneath the 22.2K, yet gold is trading at almost 2K. So it's trading a little bit unders, in my opinion. And there's a good chance that it may find itself some nice buyers, but it probably needs to break through 33 to get a momentum change. At this stage, I think it's had a trend change towards the upside. Could be proven wrong. It's about the right time for it to go. If it doesn't go properly here in the next couple of weeks, I would say that we are waiting till November. Tom, let's get coin up there. Okay, we'll check out coin. It's not dead. No, look, again, all these stocks, they all have really nice bases on them. And the thing about these stocks is if we are in a recovery, if the market doesn't just get crumped in the next couple of weeks, theoretically, these bases should provide superior returns to the market because they're so far down. I mean, they've been basic. Look at the volumes. Look at the volumes, guys. Huge volumes. Now, I'm not saying coin is the one I would pick. There's plenty of them. But all these hyper stocks have very similar. They sell monstrously. They rally back up. They drop to take everyone's stop losses out and to basically take away everyone's, love for this stock. They destroy everybody's love. They build a base, which probably has a ton of trade through it. You can probably tell that actually based on fixed range. I bet you all the trades in here. There you go. See, I drew the line on it. And the reason I know that that's there is because you can see it. Yeah. I don't need a volume profile to tell me. Neither do you guys. You can see it in the market structure. But look at the basing they've built. So someone bought so much here and retail probably sold it to them. So is that defended? I would say it is. Yes, it is. All right, Michelle, I'll do it for you. NVTA, please and thank you, Tom. All right, we'll do it. No worries. Let's do it. NVTA. We're looking at hypers. I was going to bring you guys a couple of volume trades this week, but the problem is that we got kind of weird reads. I didn't really get any quality volume reads last week, and the week before that, I got stupid ones because of the flow the flow of the Nasdaq and the rebalancing that was going on. So I would say after this week, we'll get back into that. So definitely subscribe if you enjoy this channel. Thank you to the almost 900 people joining us as well. Make sure to smash the like button if you enjoy. It does help us out to get discovered. NBTA looks like a pretty decent base. Let's have a look at the volume across the board. It's remained relatively stable. Weekly, unfortunately, was unable to hold above this wick here, and unfortunately unable to hold above 160. I think a 160 plus close on weekly should make you smiley face if you are long this type of stock. It didn't do it. That's kind of sucky because it means that we didn't really get a huge ramp breakout. We also didn't see a new high. So see how there's no new high there? That is a problem. I would think that the market would probably do this and let you in cheaper or let you in at this price after breaking the high later on. But yeah, that's the kind of way I'd think about it. Now, you might say, well, Tom, you should buy here. I don't know that's going to take the high out yet. Where's my weekly close? Where's the things I want? Base looks fine. Problem is we don't have the breakout, and I need the breakout to really confirm that would be a replicationable trade. Question on snow. Sure, we'll look at snow. It's just still stuck around 170. So 176 weekly, very good base, great volume, really nice base transaction. I'm surprised it hasn't run yet, but whatever. Looking at 194 breakout level. And at this stage, this has done quite a lot of good basing. So yeah, I think it's a sleeper. Barrick looks like a giant head and shoulders, says XX. Absolutely. Richard Kemp says markets go up and markets go down. Well, historically, markets basically just go up. They do go down, but for short periods of time. The down is fast. The up is fast initially, then slow, like a grind. Beyond Meat. Oh, wow. I have not checked that one out in a while. We're about 9 minutes off the open, so we'll go back to looking at this open. Oh, that thing's $16. Holy moly. You know why? No moat. No moat. Too easy to get in on this business. That is terrible. I don't know about this being a good base. Beyond. No. Qual's looking strong. Yeah, Qual reports this week. Let's have a look at Qual. Oh, what am I doing here? QCOM. Look, that looks like it's broken out. I mean, here's the thing. There are stocks that have broken out last week. Google, Meta, we'll take a look at them in a second. That looks like it's broken out. You kind of think it's going to 137. So here's Google. Now, it's actually down pre-market, even though it posted a breakout. That's a breakout. Let's go and have a look at Meta. That's a breakout. That is a breakout. Yet it's posting down pre-market. And the stocks that didn't do anything in particular, they just had a bit of a rebound. They're posting 1% up. Apple's posting up. Microsoft's posting down. So overall, it's really just a few stocks that are kind of pushing up here early in the session, and we're just not necessarily seeing the ones that broke out showing that strength just yet. Robcast Visuals, $4.99. Thank you very much. Hey Tom, if you had to pick between Rio and BHP or a different miner, which would you pick? Good question. Thank you very much. $4.99. The question is really hard to answer because what am I doing it for? Am I doing it for Unity's coming in? So we'll just do this for a second here. Do it for investment or swing trade? Swing trade, what do I tend to do better on? I do pretty well on Rio. Would I buy, if you're asking which one would I buy right now if I had to hold it for a long period of time? Look, Rio will always give you a better percentage than BHP. BHP is the better business. So what I mean by that is BHP is a little bit more secured. It's generally speaking better if you want more security on your investment, but Rio will give you more run for your money. So if I'm picking what I want more percentage out of, I'll generally go with an FMG or a Rio, though I wouldn't touch FMG at these prices. And BHP would be the slow and steady wins the race. So if I'm trying to trade options, I go Rio often. And if I'm trying to sell, premium, I'll go Rio. If I'm trying to trade options with liquidity, then I'll go BHP. That's the answer. Which one would I want to hold in my portfolio for 10 years? BHP, I guess. Though it tends not to perform very well, but it just makes me feel good. Unity looks like a pretty good base. Let's have a look here. So we've got this nice Unity base here, and looks like it's broken out. Something about AI marketplace, I believe, is this stock. I don't pay attention to everything, but I think this thing has an AI marketplace or something coming into it, and a bunch of other stuff. It's a decent technical. It's not too bad. When you put it in perspective of where it was, it seems cheap still. And I think you can't put it up in these prices again, but you can consider $100 as a possibility in the future for this type of stock. And that's where we're at right now. We're in these ones. Richard C says, I like Rio. Yeah, Rio's pretty good. At what price would I be interested in FMG? A few Australians out there. Vale's also quite cheap at the moment in comparison. FMG, yeah, I usually, well, I think you can probably already tell the pricing I like. $14 is pretty solid. It does tend to present quite well. But look, I've gone through the trials and tribulations of Twiggy. And for anyone that knows, Twiggy's the CEO. And I remember this period here, and that was pretty nasty. But he's pretty smart, and the way he's turned it around is pretty good. So I like between like 15 to 14 usually. It's pretty good. I'm accumulating Vale, says Richard C. Yeah, Vale is a pretty decent price in comparison. Like, look at these charts. You can see Vale, and admittedly, I think the market generally gets it right. But look at Vale's price in comparison to the others. Now, Vale never recovered, so clearly the business is not as good. But with iron ore where it's at, you'd think it's doing better. That's a nasty sell, though, last week. Been a long time since it was that low. Yeah, you're asking me for an investment, aren't you? In terms of where you're looking at from a TA perspective, well, again, it's fairly simple. Like the lines I have here, these structural lines, that, and that are the levels I'm looking at. There you go. No worries, Chris. Appreciate it. Thank you very much. All right. Market opens in 3 minutes. So we're coming in green here. Let's look at the gaps that were presented on the SPY. So we'll load up the SPY gaps. Let's go to the daily. It seems it's just a gap-a-palooza every single day of the week in these markets. So, all right. We have one gap here today. Close 456.93, opening 457.57. Should we fill that? I would say yes. We would probably fill that in the session. Let's have a look at the secondary gap. I mean, there is it is almost unbelievable how many are truly here. If you go through and you mark all the gaps that are unfilled on the Qs and the SPY, I cannot remember another time when, I might have missed a super chat from QS. 1 second. QS, we apologize. Here we go. Haida Al Delphi, $2. Thank you very much. Would love to hear your TA on QS, please. Do it in a second, man. No worries. So, yeah, there's a lot of gaps. Now, I don't know much about market caps, but I'll tell you, well, I know a bit, but I don't think I've ever seen so many. And this is unusual. And it marks probably some kind of weird flash that will happen in the future to clean them all up. The reason why is it's statistically improbable they're not filled in the period of time that they're generally not being filled. So usually you go, I think it's like a huge percentage of them get filled on the way up within 30 days. And then after that, of course, it can take a long, long time. But it's just so unlikely that we don't fill some of these in the future. Relatively quick future too. I'm on the watch. I'm on the lookout. Again, for bulls, do I have a turn here? No. If you're bullish, would I be scared? No. If you're investing in long-term future of the next couple of years, would I be scared? Probably not, because let's face it, we're going to an election next year in the US. markets don't tend to crash into elections. Okay. They just don't tend to crash into elections. You might say, well, 2008, Tom. Yeah. Okay. We can make that argument, but they just don't tend to do it. Let's go. We're not getting political, by the way. I'm just saying that I'm just saying the facts and the stats and what we usually see. I've given a few of those stats. There's one I put in the YouTube video, which was 17 out of 18 times with the current information that we have of this year. By the end of this year, we remain higher. 17 out of 18 times. There's the ding, ding, ding for the markets. QS was the request. Markets have opened up about 0.13. And if we go down here, we've basically got reds across a lot of the tech here early. You can see reds flatlining, meta down. Let's go to QS. QS does look like it has formed a bit of a recovery, huge trade volume, knocking out that big rejection wick that's here. That usually means it's squeezed someone. That's a good close. It would be nice to break above that as well to show the real momentum of this trade, 1387. But in general, if it can do that, any pullback should have to think of being met by bull demand. Looks like a pretty good base. Volume was down, unfortunately, but yeah, not too bad. Thank you very much for the super chat. Appreciate it. Hyper bull conditions creating the gaps. Yeah, I just think it's it's a big one. Spinks says today we close all gaps. We'll figure out whether that's going to happen. So Amazon opens up 0.45. Some of the other reds open down. Nasdaq is almost the weakest index now opening. It's just above the S&P, which are neck and neck. We have the US 2000 doing better, so 0.48 in the US 2000, and that's approaching 2K again, which has been a resistance. The German market's off its head. Look at this thing. It's absolutely bonkers. I absolutely would go out there on a limb and say that this was an area I was looking for a short. It was doing everything that I expected it to do, and then it breached through, okay? So if you're in a short, you should have already lost that trade and been moved on to the next one. The problem with this was always going to be 16K. And if we'd gone for activation at 16,000 and we broke underneath, I'd be actually kind of weirdly sad if that had happened. So remember, shorting is hard, longing is easy in comparison. But in this case, I wanted 16K to be broken. It didn't happen. Well, we were a bit stuffed then. Harry S says Petrobras cut dividend from 25% to 18%, and the market loves it. The market loves everything at the moment, as we know. So we've rallied a little bit now off those lows. We've got Tesla trading at 0.65 again. Tech kind of mixed here. Bonds are up on the session. We've got some bonds there. And of the stocks that we're covering at the moment, it looks like defensives are kind of flatlining. Net's another one that we've been looking at recently that's been trading in a weird range. 3 days' time, we get earnings on that one. That'll be an interesting one. PayPal's up 2.3. I assume most hypers are up. Let's have a look at RK. Again, we circle back around to where we started today, and we say that we might need to check out 51.46 in the future. Because if RK stocks start firing, that means we've got hypers across the board on fire. And we all know what happens then. Wild returns. Are they risky? Of course they are. They always will be. So we're looking for breakouts there. US oil continues to go up. Now, this is the CPI case, and I'll bring it up in tomorrow's video. So make sure to check out for that one. What's going on the Oz 200? Banks running pretty okay. A few people saying SoFi is good. Let's have a look at SoFi. Yep, 18.53%. So SoFi's base continues pretty good. This is actually where I thought it would sell, which it did. And I actually thought it would return back to this price before rallying. But the stock market had other ideas. I mean, that's what my guess was. But today, it's doing really nice. And if you held that as an investment down here, congrats. That was a good investing level. As a trade level, though, I still would have taken profit here, and I stand by that. Can you have a look at UNH? United Health Group had monster trade on it the other day, and I did report on that. So you can see the trade cycle, and it was really big trade over here in the div. obviously. And then we got really nice injection. Someone traded big in here. So technically with United Health Group, I believe pullbacks will be met by bull demand. Earnings that good? I don't even know if the earnings need to be that good. So Nasdaq's now flipped to the sell, only up 0.04. Clearly, SoFi is probably the discussion of the day. And just remember to get your earnings calendar out this week, guys. These are the big ones that are coming out. SoFi was one of the biggest today, along with Panasonic. Does anyone care about Panasonic anymore? Isn't it weird how brands... we need to cover AMD here quickly. But isn't it weird how brands just die? I mean, it's not dead, but you know what I mean? Like, no one... It's like Hoover. Does anyone care about Hoover anymore? It was that dead. And I forgot, and I didn't know. AMD. This stock is my enigma. If I was looking at the surface of the traded volume recently, I would say someone shorted it. Now, that is to be determined clearly by a new low. That's what I would say, though. If it takes this high, I believe we squeeze to a new high past that point. So this gets closed above. Big deal. So tweezers short. It looks weak on charts. Big trades. Now, where are all the big trades? I've reported this many times. There's like 6 in here and about 4 in here. So we've got huge trades in here and huge trades in here. I don't know what they are. Are they accumulation for an explosion? Or is the price action correct with these wick rejections and therefore we're going lower? Often AMD tells you first. So if you think about call buying, AMD told us in November that we were probably dropping because by December, before we fell off, we were already showing weakness. Look at this candle here. I'll be watching AMD very closely this week. And don't worry, we'll talk about it soon. Me Prep says, so we had another bank fail reported after hours Friday. Gold liking this? Look, I like gold at the moment. I think gold is good. Yep. Well, if we do have more banks reporting, look, the problem is that even if these banks report failing, all that's doing is really strengthening JP Morgan long term. So JP Morgan is the winner. That's the shining American bank. Does anyone disagree with me? Americans out there, do you think that JP Morgan do you think Jamie Dimon is having a smiley face right now? Phil says also, Tom, you were right about Intel. Yeah. All good. Panasonic is batteries for cars. What about my mobile phone? I mean, my phone at home. Hambone says JP Morgan is too big to fail, and I hate that. It is the best bank in America in terms of just being a beast. Beast. Look at it. Look at it go. But in all seriousness, this thing is absolutely flogging all the other banks. Now, there are regional banks that have done better percentages off the pullback. But if you wanted to go with my strongest bank, it's JP Morgan. They got a sick deal. I didn't even know how they were allowed such a good deal. It's amazing. Doji Gary says JP Morgan is god tier bank. I totally agree. It's the one. Jamie for president. Can you imagine Jamie Dimon running the US? He turns it into the bank. The whole thing becomes a bank. I guess it kind of is already. Jamie Dimon will maybe run it better with his big bank. Chris says, if I could buy stuff for pennies in the dollar, my business would be great too. Yeah, but how does he get the sweet deal? No one, none of all the other banks say, I want it. And Jamie says, look, guys, I'm going to take it. Okay, it's mine. It's pretty good. These are questions we don't ask if we want brokerage accounts. All right, there we go. We'll shut up here, guys. Thank you very much for watching. Do remember that we have our bull and bear case scenarios. Look about 5 minutes into this video for our US 500 and Nasdaq discussion. Talked about gold. We do like it. Obviously, dollar index, we're looking to see whether it fails around this area here, just because, of course, it's come back to our 61.8 and our area. This would be a very important level for dollar. I don't know whether it will. This is just generally where we see the turn. So, yeah, we'll look into that one. We'll check out the dollar index. Bitcoin, again, if you miss other coins or your other markets or whatever, just remember, if the market keeps going to all-time highs, what generally comes next? I'll let you continue to think about that. Thank you very much. We've got a whole bunch of most likely hyper stocks coming next week, unless we see finally a sell-off. And do remember, CPI happens next week on Tuesday, I think, or Wednesday, the 10th of August. When is that? Oh, my bad. Thursday, the 10th of August, US, 8:30 a.m., core CPI. It could be the first spike in what's been pretty much a soft landing so far. Will that be a catalyst? My guess is we do get a CPI spike this or next CPI. I don't know which one. I would say it's in this one, and we'll figure out whether I'm correct next week. Thank you so much, guys. We'll check it out. Yes, we checked out SoFi. It's on a big run and it's done well, and it's smashing it. All right. Thank you very much. Thank you for subscribing. Appreciate it, guys. We'll see you next week, hopefully with some better internet. Bye for now. Ciao, ciao.